welcome to the panel on those twin bedfellows, stainless and nickel. In fact, I don't know what to say first, nickel or stainless, because we also have a fly up here. So if anybody in production has a fly swatter, that would be great. And come on, move down to the front. I'm Terry Savage, your moderator. I met some of you earlier. I have a kind of a derivative association with the metals markets, having spent 23 years as a director of CME Group. But I don't even think, we're not even exchanged for nickel or stainless. So I had to do a little bit of research beyond, do I want that on my refrigerator because there's fingerprints? That's the level of my knowledge of stainless and nickel. So, and I gather, I will introduce my panel. Amy said to me before, Terry, there'll be nobody here because compared to copper, we're sort of boring. Let's see, have we all got mic'd up? Are we set? Oh, nobody came to get mic'd up. We'll give you all a mic. Talk into the mic. And while we're doing this, yes, come on, tech people. This is our most important tech guy. All right, everybody, it's on. Just be sure and talk into it. Okay. Now, before we even start, I want to know, someone shout out, I'm really serious. Why are all of you here? What is it that you most want to know? Someone shout. Oh, then we could tell you anything. What? Supply, demand, scrap? Okay.
Didn't you want to hear about prices?
All right. Yeah, they want to hear about what? So that's
we can't talk about prices.
Wait a minute, that's my lead-in. Wait. Just we're on camera. We're being recorded. There's a lady in the front row now. She's smiling at me. As with all ReMA events, we follow a strict code of conduct and antitrust policy. Details of both are available on the ReMA website. They're also on flyers around the room. Now, I've said that. We're not colluding about anything, but we are talking freely about the markets, about supply, demand, the history of prices, and the likelihood of price changes. And I'll get a pencil thrown at me if I go overboard on that direction. I'm getting a nod, but we have a great panel. And as I talked to them before, they were all talking about what's been happening in prices in stainless, and nickel drives stainless, as I got a great lesson. So let's introduce the panel first. And on my far left, and you know him on your right, Alistair Gledhill, Chief Marketing Officer at Alloyed Allies, a Houston-based full-service metal recycling and metals management company. And in the middle, Amy Hinton, the North American Recycled Metals Editor at Fast Markets, legendary publication. Amy knows what's going on in the market, so we are going to talk markets. And to my left, Colin Strang, the founder and president of BM Buffalo. How do you like the way the PR people wrote this up? A nimble yet powerful metal commodity trading company from Buffalo, New York, with reach across the world in supplying nickel, cobalt, lithium, and specialty chemical products. Okay, now that we've got your bylines out of the way, I think we need to start with what's going on in the market today, both domestically, and of course, I don't think you can talk about nickel or stainless, for that matter, without talking globally in China. So, Amy, everybody here is probably in the market, knows the market, but set the stage for what's happened to the markets in the past and where we are today.
Well, I think I was just saying that it's a bit rum to make us go after copper, based on just how much activity and action we've seen in those markets recently compared to what we're seeing in stainless scrap. It's been a very solid market in terms of pricing, in terms of demand. I think the most exciting thing that we've seen recently is that molybdenum has spiked to a 2-year high of 6.6%, which is offering some support to 316. We've seen a bit of restocking on 304, but we're about to go into outage season. So I think, as with most commodities markets, we're sort of struggling under the yoke of what was termed by somebody earlier as stagflation. There's a lot of eyes, as in most steel markets, on the Fed decision on the 16th and 17th of September. So yeah, in comparison, there's not a great deal to report. We're hearing lots of sort of hand-to-mouth buying on a consumer basis. The last export figures we had that came out of the Census Bureau in July, obviously bearing in mind there's a 60-day lag in terms of when we can receive that data, were down nearly 20%. We've obviously got the dreaded T word, the tariffs on finished on stainless are still sort of, putting the market into a bit of a predicament where the sort of weak demand fundamentals, the impact of the tariff hasn't necessarily fed through to demand. And I think the general consensus is that we're looking at sort of petering out of 2025 and into 2026. And I did say before I came up here that everybody will probably be horribly depressed by the time I finish talking. And I think I'm probably achieving my goal on that one. To touch briefly on ferrous, obviously the 400 series grades are heavily tied to movements in the ferrous finished markets. Not much going there either, I'm afraid. We've seen, if anything, a bit of price moderation on the busheling at the beginning of this month. Shred and busheling determine a lot of what's happening with 409 and 430, depending on your sort of pricing mechanism. But that's a general sort of boots on the ground.
Boring, as my British friends used to say, but
I did warn you. In my defense, I told you this was going to happen.
Yeah, but not so for the people that need to supply it and are concerned about the future. Let me break down some of the 3 key points you talked about. I was interested that you led with, I'll give you a clue. For sure, 100% for sure, the Fed will cut rates a quarter tomorrow. Next week, 50-50 sure after today's consumer prices that it will be 50 basis points. Okay. But for 100% sure you get a 25 basis point cut. And I was really interested that you led with the ultimate demand in the consumer market, which is, everybody's holding their breath. They collected $1 trillion worth of tariffs and nobody seems to have paid them. It hasn't been passed through to consumers. Today we got the teensy uptick, a little more than expected in CPI, but we aren't, they're analyzing it. Who paid the $1 trillion? It hasn't impacted corporate margins because stocks are at all-time highs. So nobody's worried that earnings are going to be impacted by tariffs collected. And yeah, consumers are in a kind of a foul mood for a lot of other reasons, just because prices are high and they've been rising. We're not having runaway inflation. But every time I say, well, we don't see inflation, I get people emailing me. What do you mean you don't see inflation? Have you been to the grocery store lately? But I mean, resurgent inflation we don't see because of the tariffs. So how much of the stainless demand is really impacted by, will consumers buy new houses, get new appliances, or are they really concerned about the economy?
Well, I think if you look at a lot of the end use markets for stainless, a lot of them are consumer goods, household goods. So depending on what series or what grades you're looking at, that does have a real impact on demand on a sort of grassroots level. But then looking at other applications, there are market end use sectors that have seen some sort of moderate improvement in performance. I think chemical processing, aerospace and shipbreaking are 3 good examples of end use sectors that have actually been outperforming. So I think there's a bit of a, dichotomy in terms of, what end use application you're looking at. But I would say, yes, I think it is an issue if you look at some of the traditional, people, I think I was saying last night, I did a very unsophisticated example, but, if you're buying stainless pots and pans, do you really need another set of all clad if you, are struggling to buy the food to put in the pan in the first place? I think it does have a real sort of real life application that sometimes it's very easy to get into the kind of highfalutin principles that go behind, LME nickel stocks are climbing, we've had another 2,000 odd tons delivered today, there's an EV speculative bubble that's affecting nickel pricing, but these things all trickle down to people that, are ultimately just trying to operate, within the home or decide, whether they want to, a restaurant's going to be sort of buying new sets of crockery and whatnot, which again sounds very unsophisticated, but I think there is a tendency to kind of decouple from the everyday application of these.
What a great way to kick off this panel, a reality check. Okay. Alistair, let me take you right to scrap because that's what you do. What's the condition of the market, the supply, the pricing relationships, before we get into the metal and pig and all that other stuff? Let me just take you direct to where I think I won't say the rubber meets the road, but stainless meets the, scale. for this group, what's the condition of the scrap market today?
Well, I mean, to answer your first question, what's everyone in the room thinking?
Mm-hmm.
I think they're all asking, when is this going to get any better? It's been, as Amy said, really bad for an extended
Define
period
getting
of time.
better. Is it higher prices, or is it more volume, or is it what?
I think it's an uptick in demand obviously helps. If we can get the price headed back up to a more meaningful level above 15,000 where it is now. And certainly some analysts are calling for it to go higher next year. And, you know, Colin can talk about the dynamics of primary nickel versus secondary nickel units and scrap. But I think everyone in the room is kind of scratching their head and saying, we've never seen it like this, where you get a whole year where the price is just slowly going down. Last year, this time it was 16,000. Now we're hovering around 15,000. So if you're a scrap person, you're buying today and you're selling, turning it around within typically 30 days, and you're selling it into a lower and lower market almost consistently. I think in that last 12 months, maybe 1 month was a blip upwards. So I think that's what everyone's concerned about. And what's going to be the catalyst to get nickel out of surplus and into balance?
So it's the nickel. It's not the scrap of stainless, but that's depressing the market. It's the oversupply of nickel that depresses prices for scrap.
All stainless scrap is based off of the terminal exchange prices of the LME or SHFE. And then you've got to think about all the alloying elements, cobalt, molybdenum, chromium.
Okay, give me 101 on that. Okay, but the primary driver of stainless prices is nickel.
Correct.
Which is in oversupply because of what's going on, do I dare say, in China or Asia?
Well, there's certainly a lot of mined product coming out of particularly Indonesia, and that's what's causing there to be such a nickel surplus, and that's having a depressing effect on the price.
Okay, so which moves me right over to Colin. This is your territory. We're standing there having coffee, and Colin tried to give me nickel prices and economics 101, 102, 103 in 5 minutes. I said, save it. Does everybody out there know this? I want you to repeat it again. What's going on in the world of nickel?
Well, at around $15,000 where we are today per ton, we've got probably around 25-30% of Western mining companies that are underwater for every pound they bring out the ground. Indonesian mining companies, which essentially supply 90% of their material units into China, have been bringing out, have purchased assets in Asia for pennies on the dollar from Western companies, as well as invested in new assets and are able to bring nickel units to market for significantly lower cost, theoretically, than Western producers. And we are now started to see the LME after it became Hong Kong Exchange, essentially Chinese owned. We saw an increase in the number of Chinese LME nickel brands that have been registered, and in the last probably
that's deliverables,
deliverable material, and that has basically over the last 3 to 6 months we have seen outflows, exports from China of nickel units delivered to the LME, while we have seen cancellation of warrants by Chinese and imports of LME deliverable material into China. So that means what we're seeing is basically 20,000 tons a month of Chinese origin material being put onto the LME and almost 20,000 tons a month of non-Chinese origin material going into China and being stockpiled.
Well, okay, but what grades? And is this the pig that I've
we had a shortage of we were in the deficit for class 2 nickel. We're in a surplus for class 2 nickel for the last 2 years, and as of last year, we have now turned that around and we've got a significant surplus of class 1 nickel units, which is your refined cathodes or nickel full plate cathode. And in the West, we have seen a reduction of refined nickel production, whether that be Nickel West closing down or some of the other facilities reducing production or closing production. Ambatovi, for example, in Madagascar is having significant maintenance issues, but also has a, supposed cash cost, above $20,000 a ton.
So does the word glut apply here, or just their glut because it's so cheap for them to get it?
It was a case of setting up their production for nickel units to supply the demand for the year-on-year record highs of stainless steel production from 2019, 2020, 21. But also then China took the viewpoint in 2010 roughly, that they wanted to create and be the number one battery producing.
I want to come back to that in a minute. But can we go back to Al's? I think it was you who said to me, the plants are not operating at capacity here. What's that side of the story?
Yeah, I mean, that's a good point. If you look at mill capacity utilization, it's only now in 2025 that it's back to pre-COVID levels. It's taken 5 years for certainly North American mills to recover and get back to a point where
this is for stainless production.
Yeah, for stainless production.
What do you attribute that?
I think it was back to what Amy was talking about, consumer goods. What does the demand picture look like for stainless steel in the Western world particularly? What are the demand drivers for it? And I don't think it was there. So you're not getting that capacity utilization through the mill. And when you don't have that, the variable costs are a lot higher. So the mills have to find cost saving somewhere. So they increase the discount on scrap products, right? So it has a cascading effect. There's a tight correlation between stainless prices and mill capacity utilization. I mean, it's very tight. So now that we're starting to see capacity utilization get to pre-COVID levels, the hope is that the market can now start to get back into balance. And that's what Colin was alluding to earlier is we're confronted with this glut of class 1 nickel, and a glut of, nickel pig iron. What's going to be the catalyst to get that material consumed so that we can get the market back in?
And scrap comes in third after class 1 and to a certain extent pig.
Well, not in the Western world. Funnily enough,
okay.
The preferred raw material for, stainless mills in particularly Europe and North America is scrap. I mean, 85 to 90% of Western mills are using a scrap charge. That's 85 to 90% goes into the melt bucket, whereas the opposite is true in Asia, and that's why Asian mills have preferred to go down the path of mining material out of the ground, and they use that as their primary resource.
Amy, how do you see this getting resolved? I mean, this is two different sides of the street in a global market where demand seems to be faltering if you consider demand from U.S. consumers. Certainly not coming from Chinese consumers. I mean, they're having their own economic problems, so they're not trying to rush out and buy washers and dryers and stainless steel pots and pans. So how does this difference, the mining costs, a huge supply of ore-based inputs in Asia versus the production costs here, the utilization and the supply, which utilizes scrap. How do you see this getting resolved on a global basis?
I think it's quite a simple principle that you can, again, apply to all markets. We need rate cuts really to stimulate demand. We're seeing that across steel markets, whether it's stainless, whether, any stainless cold rolled, hot rolled coil, anything like that. It's the same simple principle. I mean, we hear that, the stainless scrap market, we're leaving the MPI and the class 1 to the side for a minute. There's about 8 weeks worth of material on the ground. We're going into...
Is that a lot?
That's a decent amount to be sat on if you're, the two main consumers of scrap that are producing the stainless, I think we hear that their kind of utilization has contracted to around 74% in the current market. So it's not, it's not terrible, but it's not great. So I think we need some...
I can't believe that you are that... First of all, what if the Fed cut rates because the economy was faltering? Half the market thinks that they shouldn't do a 50 basis point cut next week. because it would be a clear indication that the Fed now has come to the realization that unemployment is rising and the economy is slowing. I mean, leave politics aside for a moment. So what if the rate cut signals an economic slowdown, or is taken by the markets, other markets, not the aluminum market, to demonstrate, aha, that's right, they were a little late, the economy is slowing, unemployment is rising, the long-term rates might not come down as much and impact mortgage and home sales because the rest of the world's still worried about our deficits and so forth. So long-term rates, but last year, when they cut rates 50 basis points, 75 in total, the 10-year was up 1 full percentage point. I don't think that's going to happen now, but the world said, we're not buying U.S. 10 years. We're worried about inflation. That's not going to happen this time around. But what if the short rates don't stimulate a cut in longer rates impacting mortgages? What if it's taken, a cut in interest rates is taken as the economy in America is slowing more than we even thought? That can't be good. I mean, why are you sitting here hoping that rate cuts will stimulate production, demand for consumer goods and production of stainless?
I mean, I would caveat as to saying I'm not an economist. So,
but I mean, are you just praying that that's what it'll be?
I mean, this is my, the ideas we put across are predicated on feedback from the market.
Okay.
So this is what the market is telling us. This isn't, me just going rogue and running a sideline as an economist. I think, if that idea of that doesn't terrify you, nothing will. So that's the consensus of the market. That's what people that are buying scrap, on a mill level, or processors, that's what they are putting forward as what they see as the immediate kind of stimulus for the demand.
Okay. Well, I just got a little heads up for you, and I'm not on the panel. I'm just asking the questions. It's entirely possible that a rate cut could be a signal of economic weakness, that might even slow confidence and demand. What do you I hear you take a deep breath, Colin.
A controversial statement, but what if it's not a well thought out proposal and it's only to target your second highest financial outgoing per year, and just to reduce your debt payment to the person that owns the most debt?
Oh, I've said that many times. You're saying the biggest debtor to benefit from lower rates is the biggest debtor of all. Okay, we're not going there. I want to take you to another place. But very good point. Very good point. I say that all the time, but that's not about stainless. Okay, so if consumers don't rescue the stainless market, there's a reasonable likelihood that even with lower interest rates, you don't get the bump up in demand. What could rescue the the cure for lower prices is low prices, which is not an original saying by far. Any thoughts, Colin, on what the overall supply picture looks like and what could happen?
I mean, looking at a few reports from over the summer, I mean, there were statements that said, exports for lower in the short term, we're seeing lower stainless prices, and having higher exports. And in the medium term, right now, what they're seeing is higher Chinese buying for stockpile reasonings because of lower prices. So these lower prices have brought, a certain amount of stockpiling out, but again, not enough to stimulate the market back up because it's intrinsically negative.
Okay, I forgot one word. Where does it apply? I think there was a recent change. Tariffs. Colin?
Yeah, as of Friday, we saw nickel was exempted on the tariff side. Whether initially it was supposed to be exempted or not is a different story, but as of Friday it was finally exempted.
So how does it, why did that happen? Why did they come to that recognition that had been a mistake or an error, and why was it exempted, and how does that impact the markets?
Maybe finally lobbyists are having a beneficial impact. You see?
Okay. But who benefits from no tariffs on imported nickel?
Canada.
Oh,
the Canadians benefited from having no tariff for the
because
last 6
they
months.
export it.
No, they export 50% of all American consumption in
right.
the U.S.
But in the U.S., who benefits most? So if you can get nickel imported, what does that do to scrap?
We're not a producer of nickel.
No, I get that.
There there needs to be virgin primary raw material nickel coming into the US to feed into the aerospace, to feed into the piping oil and gas industry.
Okay.
But yeah, I mean, it does have an effect on scrap to some extent. But I mean,
as we discussed earlier, 10 to 15% of the nickel units going into stainless production in North America are from primary sources. So if you've got mega tariffs on those primary sources, it's just going to blow up your cost curve and make domestic stainless steel producers non-competitive versus folks other places.
Okay, but what was the impact on this Friday decision? Oh, we forgot, we goofed, or no, nickel can come in. I'm sure Canada applauded, Alcan and all those. But what did that have an impact then on scrap?
Well, for me on the scrap side, the interesting thing was to look at the first 6 months of 2024 versus the first 6 months of 2025 and how the import-export flows of stainless scrap changed. And even though they got on-again, off-again tariff treatment for Mexico and Canada, the crazy thing is Mexican imports were only down 3% this year versus last year. Canadian imports were up 21%. And I think
was that front running though of the tariffs?
Well, I think that's exactly right. I mean, I think people in Canada took a view, this is crazy what's going on, so we're going to park our stuff in the United States before the next round of tariffs comes. So what it does, Terry, is it has this distorting effect in regional markets, whether you're in the Gulf market and you're feeding off of Mexican scrap, or if you're in the Northeast and Midwest and you're pulling material out of Canada. So it's been a wild ride.
Okay, it's been wild. But when it settles down, what's going to be the ultimate demand that will pull the usage of the mills up, that will pull the demand for scrap up? Give us just a look ahead. Obviously, everything's been so volatile. We should have seen the copper chart and the people that got really destroyed in the markets and so forth. It was just astounding. I mean, really quickly. You're talking about a long, slow decline. We're talking about a long-term decline in the mills here. And then you're talking about a slow decline in the prices, I think we were talking about. So what's your most bullish case for the future of stainless? Besides consumers are buying new refrigerators.
Well, I mean, lower rates is a step in the right direction, because if we can have lower rates over a medium to longer term, then you start seeing big capital expenditure projects like petrochemical plants, oil refineries, chemical plants getting built, and those are very stainless intensive, especially nickel alloy intensive. If you get lower interest rates, maybe people feel a little bit wealthier. They fly more. We're building more planes. We've got more aerospace alloys going into jet engines and airframes.
All right. And now, Colin, I'm turning back to you, because I thought the big thing for nickel or for stainless or whatever, and all the other materials, metals that go into it, was batteries. Okay. You're the only one that knows it. Does anybody here know anything about batteries, particularly EV batteries? Oh, good. Oh, well, we have Guillermo in the back. Is that you? Because I see you all the way back there. All right, but talk to us about batteries.
Yeah, batteries take about 15% of the nickel market, of nickel units in the market. And that's partly why we have the messiness of forms, because at one point China was consuming and dissolving pure refined nickel briquettes, class 1 nickel, because there was not enough production of sulfate and carbonate. And then China, as I said before, has taken the long-term view from 2010 or so, and they've built chemical production facilities and perfected the chemistry of these products. And now there's ample supply of sulfate and carbonate to feed into the batteries side, and an overproduction of cathode and higher purity refined material.
We saw on a slide in the copper presentation that the adoption of EVs hasn't been as robust in North America as it has been elsewhere. So I'm fingers crossed that, we play a little bit of catch up, and then you start seeing this drawdown of nickel products going into EV batteries, which helps get us back into balance.
Yeah. And the one problem with that is the recipes are changing. And so the West is using NMC battery, sort of nickel manganese cobalt battery. Whereas the Asia has sort of developed an LFP, and the vast growth in Asia is coming from, iron phosphate batteries, which has zero nickel content. But the higher nickel content batteries still have a use in the market. There is a 9-half that is a high purity nickel that can't be replaced. But it goes into very small batteries.
Are you talking Duracell ever ready?
Even smaller.
Okay. Your hearing aids. Yeah, we're all getting older. It'll be in hearing aids.
But yeah, I mean, and you're getting away from recipes with 811 to 622, so 6 parts nickel to 2 parts manganese to 2 parts cobalt. And then you're also seeing a development of high purity manganese batteries. So it's all what the best application for that specific recipe is for the vehicles.
Okay, so did I get this correctly? There was a while where we thought, the saving grace for nickel will be EV batteries. And then Asia geared up to create those and the inputs very inexpensively. And now, first of all, EV sales have fallen off or are not growing, let's put it that way. And there's not a political incentive and a social incentive as much to go EV. So that's tailed off. And the newer batteries might not even use the nickel. So this nickel EV batteries are not the saving grace of the nickel market.
It depends where those NMC batteries are continuing to be adopted, and if we need to, reach the 400 or 500 mile driving radiuses that Lucid or a Tesla can give you, then that's going to be a Western battery, and it's going to make the car more expensive because that's a much more expensive battery than an iron phosphate. Whereas iron phosphate's heavier and does not take as much of a charge, but is ideal for buses, trucks, delivery vehicles going around the city, because they go 30, 50, 100 miles a day, but can stop at lunchtime and maybe go to find a wireless recharging pad and recharge or something.
You were kidding, Amy, when you said this is kind of a strange market. Is there anything sexy about stainless and nickel these days?
No comment. Other than this panel, not really. No, actually, I had a question for Colin. When I first started covering markets 7 years ago, I was doing primary nickel, and the 811 battery was all the rage. And then I wonder sorry, Tara, I feel I've stolen your job.
No.
What your perception is of obviously we're stagnating a little bit in terms of the uptake of EVs as a general rule. And it looks like the alternative battery chemistries are emerging a bit more quickly than the penetration of the EV market. Do you have a view on, hydrogen fuel cells, for example? For a while, that was big news. I mean, what's your kind of view on the timeline of how the battery technology is developing versus the penetration for EVs? Because I'm always trying to take a position on that and failing spectacularly. So it'd be niit's to know from an expert.
It's quite I don't see one up here, but to put it into into relation, it would be the lithium-ion battery took about 40 years to get from initial concept through to mass commercialization, and we're still seeing that being adopted in a lot of batteries. So that product life cycle was massive. Now we're getting these technological changes within 2 to 3 years, and even the car companies find it difficult to keep up with, some of these forecasts, because how do you put out a $30,000, $40,000, $50,000 vehicle and then, have to change your MSRP every, 6 months because of such a volatile commodity price? Maybe, in the long term, it gets to the point where, the consumer doesn't own the battery. You just own the vehicle, and you lease the battery from the car company and you return the battery. But, things are changing at such a fast pace, and there's no one correct chemistry for each of these automotive companies, because it depends if they're doing plug-in hybrids or fully electric, or, depends if they're in the west or the east, and, there's a lot of differing factors. Tata, for example, produces a vehicle in India that's less than $10,000, but you're not going to see that in the US market because the Ford F-250 is going to flatten it.
All right. I'm going to make one. First of all, I'm assuming some of you have some questions. So please be prepared. There's a microphone standing right in the aisle, and my good buddy, Annette Mike, is standing up here in a tan jacket, and we'll come around because I can't think of anything else to ask, but please speculate. Aside from interest rates cuts and consumer demand, is there anything on the I mean, first of all, let's see if I'm corrected some assumptions. Yeah, a lot of it goes into consumer demand. We also know that stainless is a strategic defense, important reliance. And we have factories here with capacity. We have scrap here, which we use to make stainless. And so we know it's an important strategic component, not only just of our economy, but of our defense. But we don't seem to be lacking in facilities to create the stainless. We don't seem to be lacking in the scrap, which is used to create it. And so is there anything even in your Fantasyland horizon that suddenly gives a boost either domestically for some particular reason, or, and we know we don't have tariffs because we still need imported nickel even though we use scrap, right? So we've announced that. So is there anything on the horizon either domestically or internationally that portends a greater demand for stainless and thus nickel and thus scrap?
I've got a little bit of a view on this. I think I mentioned earlier that some of the better performing end-use sectors are shipbuilding, defense, aerospace, defense. I think under the current administration, I think they are sectors that are seeing heavy investment where, maybe greener sectors like EV are not necessarily the priority of a Republican administration. Again, taking no political position there, but they are the facts. So I think perhaps if we were to look at the sectors that are already showing increased performance, that are perhaps going to continue to outperform based on some of the maybe government stimulus or investment, that I would keep an eye on those sectors. And I would particularly keep an eye on sort of like high temp nickel alloys going into those markets. I think that could be sort of, maybe taking an eye off the EV for 1 second. Sorry, Colin. And, maybe have a little bit of a closer look at defense spending and the uptake that will have for stainless scrap units. And, that would be my...
What do you watch? Is it just, the stories? Is it just out of Washington, or the defense industry, or orders for new whatever? Or is there a particular, piece of data that you watch to keep track of that demand?
Well, naturally at Fast Markets, we're watching everything all of the time.
I know. Well, that was a commercial for you. So you go to Fast Markets and you look at what series?
I mean, I would say we, all jokes aside, we really do have to keep an eye on everything. And, you obviously touch on sort of missives coming out of the White House, obviously coming thick and fast since January 20th. Like, it's not an overstatement to say that we're keeping a very close eye on what's coming out of Washington, as well as the, other sort of very interesting sort of PMI data and whatnot. So we are looking at all of those things. You can't really afford to miss any of those indicators. And in the current climate, I feel like, the significance of what's being announced on an almost daily basis.
I'll give you a commercial. Wait, let me just give you a commercial for Fast Markets. Okay, there are people here who are very aware of market prices, but because they sell. I mean, the stuff comes in and they've got to sell. It's a cash market. So if they went to Fast Markets, where would you direct them? Especially people in the aluminum, in the stainless and nickel area. What series, where would you tell them to go when they go to Fast Markets to watch? Is it the stories, the content, or is it the price series, or what?
Well, it'd be a confluence of everything, really. So obviously, as part of, we have a My Desk facility, which gives you lifetime LME data. So you can track your stocks, you can track your spreads, your cash price, your 3-month price. So you can get all of that fed through from the LME via Fast Markets. Then we have our pricing assessments. Shout out to Abby, who is actually the stainless lady, who is in charge of our pricing. And we've got dealer, broker, processor and consumer pricing that's coming out either weekly, bi-weekly or monthly. There's reportage that goes with that that's very well followed. Obviously under Fast Markets we have the AMM brand, and actually Alistair and I were talking earlier on how we've got over 100 years of sort of tried and tested reputation across scrap markets. We're obviously a benchmark for ferrous, and we're very active across all of those markets. I'd say obviously we've got it all there via the dashboard, and then if anybody wants directing, just give me a call. We're very friendly.
See, now that was just a 1-minute commercial, and I don't think that anybody is ignorant of that, but it was really good to hear it all put together, because when I went to look, okay, who is Amy? Whoa, fast forward, that does more than I thought. Okay, Alistair, Colin, you're jumping into bit here to contribute. What were you?
I think it's only fair that everyone gets an infomercial.
I'm going to do that. I'm going to do that before we do questions. And I'll start with you. So talk to us about what you see for the future. And just explain a little bit more in case someone doesn't know. Exactly what do you do?
So I actually have an update. I never submitted my own bio, so it was very well written, whoever wrote it. But my company was just purchased last week.
Oh, congratulations.
I joined a company.
Are you rich?
With love. It's all relative. I joined a company called Tangent Trading, who's owned by Morex, and we're going to be setting up a physical metals book, not only across primary but across scrap products as well, and obviously finding them the best synergies for their markets. So that's pretty exciting. But going into next year, we definitely see the potential. We're at levels in the LME prices where 30% of Western miners are underwater. We see a situation where there's still some downside, and nothing really to bring that up until possibly Q1 next year. You look at some of these bank forecasts, and that's in line with what they're reporting. So,
is it better?
Going into Q1 next year, there is some optimism, but nickel is similar to cobalt. We've seen Indonesian mining flood the market with product, and we're now sort of at the point where we're open to geopolitics and moving the prices and moving everything for us.
Well, I've got you and you have the mic. Talk about all the other things that go into it, all the other metals, the manganese, the molybdenum. Did I say that right? Yeah. Cobalt and everything else. Is this situation roughly parallel with all of those, or are there any exceptions?
I think you'd say molybdenum is the exception, in that group of materials. We've seen a 7% rise over the last few weeks. And it's a market that's more opaque, but it is a byproduct of copper. It's intrinsically linked.
Excuse me for interrupting. Alistair, do any scrap, recycled metals people, do they ever notice moly?
We're paying attention to it on the daily. I mean, it's an intrinsic element. It's a value driver in, bulk stainless like 316, and certainly much higher corrosion resistant alloys, like A286, AL6XN. So.
Another really naive question. What scrap contains moly?
A whole bunch of them.
Okay, that's good enough. Okay, yeah. It's not just, so go look out for...
And then there's a whole other family set that's nickel and cobalt, and then another set that's nickel and copper. So we do have to pay attention to...
What's going on geopolitically with all those? Is they part of this world? We'll protect ourselves. We in Asia, for instance, mine this. Where is the United States deficient in mining these particular metals?
All of them?
All of them, yeah.
Partly they don't really have their own raw feed source for raw materials to then refine. Mm-hmm. So for example, there is a new nickel and cobalt refinery being, a pilot plant opened in, Oklahoma. But where do you get your feed source from? You've still got to import it from Brazil, Africa, somewhere that is mining it out of the ground. And then that's 8, 10, 12% nickel content, and you've got to ship that across, the ocean. And so that makes it a very expensive proposition to bring it over when you have a North American supplier up in Canada, doing a very similar process.
Yeah. I mean, as far as I'm aware, there's no US based nickel mining. There is one molybdenum mine out west. Yep. No cobalt to speak of.
Idaho, you've got a cobalt mine in theory.
Okay. No chromium to speak of, right?
You've got a chrome producer that's opening up in Pennsylvania in Q1. chrome metal producer.
That's the electrolytic stuff.
Electrolytic chrome, yeah.
So are we vulnerable in the United States because of these strategic metals? I wrote a report about that 25 years ago.
We're very vulnerable. I think we're seeing that, from the export restrictions on rare earth metals and some minor metals from China. We're extremely vulnerable, and the exemptions we put on, and the exclusions on some of the duties that we sort of put forward, 4 years ago, kind of gave a blueprint of exactly what high purity materials we need to put into our jet engines and rotating parts.
So are we vulnerable if China would I mean, they've got to keep things going there too, or they will have a lot of unhappy people. But is that the game of chicken? They have the strategic and control the supply of strategic metals.
Certainly on rare earths, which go directly into electronics, they've got a lock on it. The only other place where there's a concentration of rare earths is Ukraine, and it's the part of Ukraine that is under Russian control. So yeah, that's a vulnerability for sure.
All right, time for questions. Anybody out there, you know more about this, as you can now know, than I do. So what's the big question out from the audience? Yes, right over here in the center aisle. We'll get you a microphone.
Derek, CMC. So we touched on moly and the increase recently. What is, I guess, in your opinion, why is that market increasing? What is it about moly? Is it just a shortage of demand?
I think partly it's an opaque market that's priced not in a public index. And you have a lot of input from Chinese traders to move the market one way or another. But I think partly it's just very tight. There's a lack, especially on the roasted products. There's a lack of roasting capacity to actually bring product to market, whether it be ferromoly or oxide. And then the fact is that in the US specifically, you've got the tariffs that had the issue, with a lot of material and a lot of moly concentrates coming in from Peru and Chile. From part of my role is actually as an agent of Anglo American, and so Anglo American were bringing up copper and moly concentrates from their as a byproduct from the Peruvian copper mine, and so obviously you have to pay duties on the way in, and you can't reclaim them if you're shipping it out to Europe or something.
But copper is now not tariffed on the raw materials.
Copper? No, it's not on the moly. Yeah.
But
it's a byproduct of moly.
Oh, yeah.
It's byproduct of copper.
Yeah. So the moly's tariffed separately? Oh. What's the tariff on moly?
I couldn't tell you off the top of my head. It's not something I've...
Okay. It didn't make any headlines in my world. Anybody else? Is there a burning question that everybody's waiting for someone to ask? You can ask it anonymously. You could shout it out. I mean, I think the burning question is what would drive prices up? Is that the burning question? I'll leave each of you with a chance to give us a closing thought. If there's nobody else in the audience brave enough to step up, well, I hope I'm asking the question on everyone's mind. Alistair, what is the outlook, and what could be the thing how long do you think it'll take? Or is this just a forever kind of a thing until we have some kind of, a national defense crisis that starts things going?
God forbid it's a defense crisis that stimulates stainless scrap.
That's what I mean.
But no, I mean, for me, looking back over the 30 years I've been in the stainless scrap game, what's interesting is that nickel pricing, stainless pricing has been stagnant for an extended period of time, the last 18 months or so. Usually nickel is one of the more volatile metals, both in terms of price and demand. And you get these black swan events occasionally, like we had in 2008, we had in March 2022, where the market just drops precipitously because of somebody's pulling the wrong lever at the wrong time. But, if over the last 30 years, the time when it was really going great was 2004 to sort of 2007. And it was the China effect, because they were doing these massive stimulant building projects. They were retooling their economy for the 21st century. And business was good. We could not keep up with their demand. I'm not sure I'm seeing anything like that on the horizon, especially since part of China's response to not being able to get enough nickel was to go build more mines, right? Their response was, given that most scrap stays in the Western world, or historically has, they haven't quite developed their own recycling industry yet. So it'll be interesting to see if they do that and what effect that has on demand going forward. So unfortunately, my crystal ball's pretty foggy. Like, it's pretty opaque.
Fair enough. If there are times like that. Amy, I'm going to turn you back to the markets, because that's really what you follow. And I asked you kind of an inside baseball question, but I was going to ask you later, but I'm going to ask you now in public. So, as terms of the pricing mechanisms, where does that stand now? The kerfuffle on LME and the busting of trades and so forth. How confident are you? And I'm not talking about asking about what prices will be, but where is pricing now, and is it trusted now? And yes, the only reason I know about that is derivatively because of CME. So I'm just intrigued by where you think that pricing mechanisms stand today.
So in terms of our assessment, the lead comes from obviously anybody that's trading non-ferrous or stainless will have a view on LME or COMEX pricing, and by and large, people that are buying, whether you're buying spot or if you're buying contract, you'll be on a scrap basis, you'll be tying an element or a percentage of that price for any given grade to those exchange-based prices. In terms of confidence in our assessment, it's really market-led. So it's, people that take a view or a position based on, how those exchanges are performing, and then feed that information through to us to provide a cogent assessment. So I think it's a difficult question for me to answer. Obviously we can't speak to the price. I think, based on market confidence in pricing mechanisms. I mean, it's been an interesting time for stainless sort of in the recent history. The discontinuation of the quarterly ferrochrome benchmark, for example, took the rug out of a significant sort of independent pricing indicator. People seem to be managing. Fast Markets has quarterly ferrochrome pricing out of Europe. So, people still have reference points. I'm not sure I've answered your question, Terry, and I'm not sure I can answer it, actually, because it's a little bit of a sort of conflict in terms of, the fact that
you're reporting it. Yeah.
Obviously we have a view on it.
So then let me give you one more chance to give this final takeaway thought, as you watch the markets, to our audience here who really care about the markets. And I haven't yet found a catalyst. I was hoping someone on the panel would come up with this brilliant idea. Oh my God, this is going to revolutionize the demand for stainless. Look at this new thing, but we don't see that. What do you see in the future?
I would like actually to piggyback off the excellent point that Alistair made about China. China's had 30 years of going really gangbuster on its infrastructure, and that is slowing down. And I think unfortunately my view is based on kind of the global indicators and how the economy is performing and how sort of countries that really heavily influence nickel and stainless are probably set to perform. I think we're probably looking at a general slowdown. So I don't think it looks great, in the near term at the very least. So I don't have, my crystal ball is equally as foggy, but I don't think the prognosis is that great. Obviously, I'm not hoping for a defense crisis either, but I think, maybe view those end use sectors. But I think it's going to be a bit of a grind, to be perfectly honest. But I'd love to be proven wrong, obviously.
Okay. We talked earlier about EV batteries. Well, the good news is EV batteries should suck up a bunch of nickel. But then the bad news is we're less reliant on oil and gas, and oil and gas is a hugely stainless intensive sector.
Good point.
You push over here, and it's a good thing on EV batteries, but you're losing market share over there.
Balls in your court, Colin.
Yeah, I think it's a really tough one, because if China's economy is having a cold, the balance of the world is really off. When I first started in the industry in 2007, China produced around 17% of nickel and consumed about 23% of all nickel units. In 2024, China and Indonesia accounted for 72% of production and 75% of consumption.
the wonder we have an industry at all.
Yeah. But no, it's, on the sheer numbers, I mean, the steel capacity in the US is half the steel capacity in Europe, and the capacity in Europe is half again of that of China. So it is a minuscule market, but back to your point, there is a focus on higher purity alloys, higher purity nickel alloys, aerospace alloys, a little bit more advanced technology, than exists in the East, but they are catching up. To Alistair's point, there's no new cities being built in China. If anything, there's empty cities, and the housing problem is cropping up again. Evergrande was, the first bubble to burst a few years ago. But it's ultimately what's going to have to happen is India is going to have to take that place, rebuilding the slums or rebuilding, the parts of their, country that, just needs to house people because they have a population growth issue as well.
Well, we are not an island in these global metals markets, and we cannot count on the U.S. consumer to demand new hex-clad pots and pans. So this is going to be a very interesting market to follow in the coming year. Maybe we'll sit here a year from now going, boy, we sure didn't see that increased need coming or something like that to turn the markets around. In the meantime, you've provided a really great analysis of where we stand today. I hope you'll join me in thanking our panel. You've been terrific, and they will stand around afterwards for questions. Thank you.